In just a few weeks, the federal tax credit, the $7,500 you get when you purchase an electric vehicle, is coming to an end here in the United States. This will have an impact on new electric vehicle sales, but it could also have a much larger impact on the entire automotive market and partly the economy as well. And it could partially raise your taxes. What am I talking about? Hey, it's Tim, Pickup Truck Plus if you talk. The stories are around pickuptrucktalk.com. Longtime friend of mine, Corey, wrote it up for me. He's an old college buddy of mine, and he did some research into this because I asked him to, because, well, I paid him to. And we talked about what's going on with the EV industry, how this can not only impact the EV industry, but also like big picture, because I think a lot of people are really a little confused on this because they think it's just going to impact EVs, and I don't want that crap anyways, and it's going away. Who cares? But there's a lot more to this story. So let's go ahead and get to this because, as we said, the EV tax credit is ending. This isn't a new thing. It's not new for United States either. This is a tax credit that many countries use for the adoption of electric vehicles as they spur on an industry. Now, this happens for many industries. Oil and gas subsidies get tax credits, new housing get tax credits, new colleges, new stadiums for sports stadiums get tax credits. So anytime the government wants to make a new business or a new area of business get incentivized and make new growth, they give tax credits. So we've had EV tax credits going for a long period of time. But there always comes in a time and place where you say, hey, maybe the industry is mature enough, they don't need tax credits to help anymore. And so now we're saying, okay, well, hey, is the electric vehicle industry by itself mature enough to handle not having tax credit on its own, and will it survive? This is something I've been really interested in the last couple of years because I think it'd be great to see what happens. And well, grab your popcorn because we're about to see what's going to happen. So will it survive? Well, it won't. And that's the question I want to have raised in this question, in this story. And I want you guys to comment down below. What do you guys think is going to happen? Will it survive? Will it fall off a cliff? Let's tell you what the story is and give you more details. So we know it's going to end. And we've already seen in the last couple of months where we've already seen layoffs. GM's laid off many different people for the Hummer, Silverado EV, Sierra EV. We've seen delayed or canceled billion-dollar investments. There's whole listings of plants in Michigan, plants in South Carolina, different battery plants that have been canceled. They were going to be build these plants here in the United States. Outside investors, they said canceling these plants because there's no foreign investments, there's no incentives. They just canceled those plants. So what I've said, and we had some conversation with Corey offline, him and I were talking about this, if those companies don't build those plants, don't employ those people, they don't pay those property taxes, then there is a shortfall in those local communities. We're not getting those property taxes coming in. And so the community itself will have to pay the differences in property taxes. So I live in Nebraska, one of the highest tax state in the country. And why is that? Because we don't have industry. We don't have businesses to absorb some of the taxes. So the citizens themselves make the differences. We have a lot of agriculture here. Farmers, to their credit, they get a lot of tax breaks for the farming equipment and for the property. And so we have high taxes. Same thing happens in different areas. If you don't have those capital investments, you do have increased taxes. Whether it's sales tax, property tax, taxes got to be paid. You got to pay for infrastructure, you got to pay for those roads, and you got to pay for the mailman, you got to pay for different things going on in your community. So that stuff's all going on. So the question is, could it be more worse than that besides just the layoffs, delayed investments, raised taxes? What's going to happen with these EVs? So we spoke with different experts, industry trends, the news. What's going to happen with electric vehicle sales? So right now, as it stands, in quarter three, which is, let's see, it's going to be January, February, March, quarter one, April, May, June, quarter two, July, August, September is quarter three. We're having record sales in electric vehicles in quarter three. Why? Well, it makes sense. Everybody's rushing out right now to get the last of the deals for the $7,500 credit, right? I actually told my parents this. I was in Michigan last month, and my dad and my stepmom would kick around the idea of having an EV as a secondary vehicle. They don't drive the other car very much. I said, if you want to buy an EV, go buy one now. The dealers are making deals because they don't have many lots. The $7,500 tax credit is going away. You need to buy an EV today if you're going to buy one. So they were going to go out and do some shopping. Not quite sure if they're ready to commit yet, but I'm like, this is the time to buy. So you're seeing third quarter electric sales are likely to reach their highest levels ever as people are out there shopping, buying whatever they can find because they want the best deal. So John Buckler, who's a longtime friend of mine, said quarter three sales will probably be the highest percentage of electric vehicles ever sold in the US. There's a lot of preloading, which means people are buying these so that way they can pulling ahead for some purchases, take advantage of the incentive. So they're not going to wait. Buy now, buy now. That makes sense. But we're also seeing a cooling trend. Of course, that means that come September 30th, when the EV tax credit ends, interest rates set to slow down. That much is not in question. We know things are going to slow down. The question is, how much of a slowdown, for how long, and where the market will settle. So Carl Brower is an executive analyst for IC Cars, sent a statement over. He said, with both electric vehicle credit for consumers and regulatory requirements for automakers going away this fall, there'll be a substantial drop in electric vehicle production, sales, and market share starting in quarter four 2025. This drop will continue for the foreseeable future, with EV share likely settling around 4% of new vehicle sales for 2026 to 2028. So that's 4%. That's not even close to the double digit, like 10% share people were thinking about was going to happen. That's way lower than expectations. And so we're seeing those by supported slowdowns production from brands like GM, Volkswagen, and Rivian. They've all pulled back production. So what happened internationally? This is a big question for me and something I asked Corey to look into, because this is not the first time that the EV tax credit's gone away. This may be the first time it's happened in the United States, sure, but not the first time it's gone away internationally. So there's a story last year in MIT Technology Review that looked at the effect of ending subsidies on EV sales in Germany and Sweden. So Sweden's a little bit different because Sweden is almost all adopted EVs. They really make a big push. Germany's, I guess, a little more closer to us. So, unfortunately for the US market, both Germany, which saw a steep drop off of 37%, and Sweden, which saw a more modest drop off that quickly leveled off, are well above the US rate for adoption. So, the article put Sweden's EV percentage at 35% of new car sales, while Germany sat at just over 20%. So, according to the recent IC Cars report, we peaked at right around 8%, well below Germany. So, we're going to see a bigger drop off in sales because our overall adoption rate is much lower than Germany was and much lower than Sweden was. So our market is not nearly as mature as Germany and Sweden were when they ended their tax credits. So we're probably going to see an even, like I said, even steeper drop off in sales of electric vehicles, which means we're going to have compounding effect of not as much production. We're going to see more layoffs for people losing their jobs, and we're going to see more pullbacks of capital investments of businesses opening in the United States and more plant investments. So we'll see more automakers and foreign investors will pause on production as far as new plants and new investments. Now, there are some positive factors that may help the electric vehicle market and help automakers who need electric vehicles to keep selling, like GM, Ford, Stellantis, Honda, Hyundai, Toyota, Nissan. They got to keep building EVs because they're global automakers. So they just can't throw in a towel here because they got to sell them in global markets. So they're counting on the fact Americans still buy these because they need the research and development dollars to go back into the business. They need that money. So they're looking at some ideas on how to get more people to buy EVs. So John points out there are quite a few number of states, primarily blue states, have their own incentives. Some of them are still fairly generous all by themselves. Those are not going away, so that's an important context. We've heard from California. I think I heard something from Colorado and different states that still have their incentives that will still spur on EV sales in those areas. So we'll have maybe some bubbles that will still have good EV sales in the countries, like bubbles like states do well. And then there's the fact that there's more emerging class of cheaper EVs. You got a new Nissan Leaf that's cheaper. Chevy's talking about a new Bolt that's going to be cheaper. Ford has their new $30,000 midsize truck they're trying to bring out. That's going to be cheaper. You have a lot of cheaper alternative EVs coming to the marketplace. They typically have lower maintenance costs and use costs of these EVs versus a gasoline vehicle, so they're cheaper to maintain. So there's some factors involved that may spur on EV sales and EV vehicles as far as growth if these vehicles come to marketplace hit those targets for those prices. Okay, so we have cheaper EVs could come to the marketplace that could drive on some sales. And then we have a lot of other stuff going on. You have the issues with politically, you have international incidents with the plant raids, you have problems with the Chinese trade war impacting magnets coming over here. We not be able to build EVs because we would not be able to have the rare earth minerals. I did a story on this a long time ago from the problems with having the armed forces have enough jets to fly because we don't have enough minerals coming in that also supply the batteries for EVs, magnets for the regenerative braking for vehicles that impact hybrids as well and other gasoline and diesel vehicles. So there's a lot of stuff going on. And once you pull back from investing in EV marketplace and stop having the investments go in, you can have a lot of difficulty going to marketplace for this kind of stuff. It's going to lead to more layoffs, less investment, lower production, lower sales, lower improvements in future battery technology. There's a lot in the air. There's a lot of juggling balls in my hands right now. So I don't know. It's going to be really interesting to see how that all kind of works out. Yeah. Magic Eight Ball says the Magic Eight Ball says the experts, international examples, common sense all agree. In the short term, the market is going to slow down. The EV market probably will go from say if you're at 100% after September 30th, I'm gonna say October 1st, you're gonna be down drop 40, 50, 60%. Bam, right off the bat. And then you're gonna see even more drops, and it's gonna be a massive slowdown. But longer term, 2026 and beyond, you could see things getting better. You could see the cheaper EVs coming back, coming to marketplace, the Chevy Bolts, the Ford $30,000 truck. You can see those coming out. Maybe there's some interest there. Maybe Slate can come to marketplace, although they're having some really bad headwinds right now with the federal incentives to build electric vehicles going down even further and to federal tax credit going down. So administration's not really investing in that stuff at all. So they have a lot of hard time coming to marketplace. So you have a really tough environmental environment to invest in EVs as far as a business environment. It's going to be interesting how it works out. Will the EV tax credit come back? It's possible. These politics get involved, and one party comes in, another party comes in 6 months later or a year later, and they're like, "Hey, we're losing money hand over fist here, and these businesses are going under." So there's a lot going to happen, and so it's going to be interesting. We got 14 days till this happens, and it's interesting. There's not a lot of other automotive outlets they're talking about this. I think this could be the story of 2025 because even though if you don't like EVs, what do you think is going to happen to the price of your truck tomorrow that you're going to buy in October? Is it going to go down? No, it's not. It's going to stay at the same price or go higher because these automakers are going to look to try to recoup their billion-dollar investments that they're losing by not selling EVs, by keeping the truck prices high. So you're talking about more money it's going to cost you to buy trucks and SUVs in the future. I sit back and think to myself, this is going to be very, very interesting. It's going to be a roller coaster to the end of 2025. In 2026, I don't see truck prices coming down at all. I don't see things stabilizing for the next couple of years. This is a big deal, and I think it's going to have wide-ranging impact in the United States and globally for these automakers who are going to struggle now to try to get these other cheaper alternatives marketplace as fast as they can to try to get some sales, to get some revenue, to recoup some of the major investments that they made so that way they can get their businesses back online. All right, so what do you guys think? That's what's going on in my mind. Clearly, I got a lot of stuff going on. I see this impacting everybody from the mom and pop farms in South Dakota and Nebraska trying to buy brand new trucks, and those prices aren't coming down because automakers are going, I can't afford to sell these trucks cheaper because I need to recoup my losses from electric vehicle investments, to the major companies who have pulled back investment in the United States who are saying, I'm going to invest that money in India elsewhere, to people not having the job opportunities and the layoffs that are happening in Michigan. I think it's going to be really fascinating to see how this all plays out and how this transitionary period plays out. And where does this money go that was going into electric vehicles? Where does it get invested? Because I'm not seeing anywhere from automakers who are talking about investing this money elsewhere. Right now, they're holding off on future capital investments. So everybody's holding at the moment. And that's not good for economic growth. That's kind of scary, in my opinion. So again, comments down below. Be curious to get your thoughts. Check out the other videos channel up over here. Website down below as well. Pickuptrucktalk.com. As always, thanks for watching. I will see you down the road.